Hello, this is Ahra from Audit Markets. We'll be with you to review the Jackson Hole Symposium, which we had last week, and see what happened in Jackson Hole, what the policymakers decided to do, and how the market reacted to this meeting. Uh, as you know, the Jackson Hole is the annual meeting, which is always, let me share this. Okay, I can share my page. Yeah, this annual meeting, which usually holding by the Federal Reserve Bank, Federal Reserve of Kansas City, in a Wyoming state of the United States, that meeting is always going on. This is where the policymakers from around the world and central banks they're coming together to decide about the monetary policies, to decide about the economy, to discuss actually, not even to decide, to discuss actually about the economic conditions in the different countries and the different economies, how they look about the future of the economy. Usually, we see what we saw in the previous years that this Federal Reserve Fed chair, which this right now is Mr. Powell, or generally the head of the United States Federal Reserve, is usually have a speech at the last day this symposium. This year also, Mr. Powell had a speech as the Federal Reserve head, chairman. The most focuses were on his speech. However, we should not forget that it's not just about the United States economic and economic policies. It's about all around the world. It's about the central banks in Japan, Europe, China, and around the world, just like all main or major central banks. Before reviewing what Mr. Powell said, let's see what happened first in a difference in other economies. Generally, what we understood from the speeches that we had from the economists and the central bankers that they are not so much confident about the economic growth in the 2025. Generally, they confirmed what the World Bank was thinking or is thinking about the economy in 2025, which is slow growth. I mean, the World Bank thinking that the economic growth in general, in GDP growth in the world as a whole world, the GDP will be more softer compared to 2024 and 2023 especially. In this generally outlook, the World Bank and what we understood from the speakers in Jackson Hole, they believe that the United States economy will face a soft landing. And during the soft landing in the United States, during the soft landing in the United States, we can see the Chinese economy can, as the world's second largest economy, can somehow cover from the troubles that it has right now in its economy, and they can overcome with the Chinese economy. The most problem in the Chinese economy right now is the domestic demand. So the people in China, the Chinese citizens, they do not ready to spend their money. So the demand in China, they're expecting to recover. So the Chinese economy can slowly recover itself from the troubles that it has right now at the moment. In Europe, they're thinking that, generally the central bankers and economists, they're thinking that they're going to have a better economic condition compared with the others as they faced so many troubles in 2023 and 2024. Now it's going to be the time for the European economies to slowly recover. At the same time, in Japan, after years of the recovering economy, and actually not the recovery, growing the economy with the support of the central bank, BOJ deciding to slow down or stop even its stimulus or the supports that they had from from the markets and the stock markets and generally from the economy, and that can lead this economy in Japan to slow down a little bit in 2025. And not to slow down, it means just like going back, slow down as a speed of the economic growth. It's the speed of economic growth in China, in Japan will slow down a little bit more in 2025, but still we can see the economic growth in Japan, but with the slower pace. that will cause the Japanese yen to increase a little bit as the Bank of Japan will increase its interest rates. So while we're going to see the rate cut in Japan, in United States and Europe, we probably will see the rate hike in Japan. That can change the carry trading's condition as well, which will lead to more pressure on the United States economy or stock market as the money is going back from the United States back to Japan or the Japanese stock market. That can cause a very kind of challenging idea. What can we do from the money that they're going back from United States to China? Should they move to somewhere else or stay in China and go to the stock market or go to the bond markets or Japanese gilt market? So that's something that we can talk later about that. That's generally what we had from the global economy last week. But as we talk about the Mr. Powell's speech, the Powell generally was somehow accepted that they had a mistake in believing that the inflation which started in 2021 is going to be short-term inflation. They were mistaken on that. We were talking actually back in 2021 that this inflation is going to show itself as a long-time problem. Anyway, the central bank in United States, central bankers United States, or the policymakers United States, first they were thinking that it can be just inflation in production or manufacturing, and as the quarantine, as the restrictions during the COVID, they banned the ways and supplies, and they made so many troubles for the supplies. So as we can overcome from the supply problems, so we can control the inflations as well. But now slowly they understood, no, that's not going to be a short-term inflation when this inflation moved from the production to the service section. So when the inflation came to the service section, then the central bankers understood, no, that's not going to be a short story, that's going to be a long story. And that long story made the United States Central Bank or Federal Reserve to hike the rates with very, I mean, at each meeting, they increased the rates by 100 points, or even sometimes 75 basis points, 50 basis point. That rapidly increasing the rates was the reason of that changing the mind. But they believe that the shape of the recovery in United States economy, this shape was V shape, and that caused the inflation to that caused the inflation to stay longer, higher for longer, which later caused the central bank to hold the rates longer, and that made just like some weakness, that caused some weakness in labor market, and also slow down the inflation in service sector and then in the production sector. But still, the economy is facing some problems, some kind of challenging, and these challenges will hold back the economy to increase a little bit, just like slower than it's expected, their expectations that they had before. Generally, what the Powell said, it was story of what happened. He didn't make any clear idea of what central bank in United States, what the FOMC members in United States thinking about the economy in a long term. They just had a story of what happened. They just give us this some idea of what's going to be happening next few months. But the Federal Reserve Chair, Chair Powell, did not. That's the main topic that we have. Main point actually, main part that we have to point it out, that Mr. Powell did not have any clear idea of economy after 6 months or during the year ahead or during the next 2 years. What a central bank thinks right now is all about it, just next 5 months and next 6 months. That's the main mistake, or actually, cannot say the main mistake. I can say that uncertainty that comes to the market. So this uncertainty that Federal Reserve policymakers they have, that can move towards the markets. And now you can see what happened in the market. That what happened. So the main point was uncertainty that the central bank gave us, as the Mr. Powell did not show any clear sign of what the central bank going to what the central bank in next month in next year going to give us, or what they're thinking about the economy. This uncertainty that they had about the economy counts this uncertainty will count the uncertainty in the stock market as well. Let's check the charts. um, Here is my chart. Let's start with S&P 500. I'm watching always the S&P 500, the US 500, because that's the largest, kind of the largest idea of the what is going on in the US economy, as we have the most biggest 500 biggest companies in the States. So that's why I'm always checking the S&P 500 or US 500 or whatever you call it. As you can see, Wednesday, Thursday, and Friday last week that we had a Jackson Hole meeting. Nothing especially happened in the market. We had some slow growth, then fall, then slow growth, and almost a little bit slower. A little bit, the market closed a little bit higher last week, but still it was higher. As somehow we can say that just like the psychological idea of just like the Fed is going to cut the rates. That helped the market give the confidence of the 100% in September we will have the rate cut. But that's not the idea of that's not what the economy, the main investors looking at. As I told, the main investors, they're looking at what generally policymakers and the main economists are thinking about the economy in 6 months or next year or 1 or 2 years. So that means the uncertainty in the market, that killer. The uncertainty is the stock market's killer. That can cause pressure on the stock market, not because that the economy is going to be worsened. No, just because that we don't know what's going to happen. That's the main problem. Even though if the economy is going to be increasing in the next year, it's slow, so still there's a doubts. That doubts is a killer for the stock market. That's why I'm thinking that after this meeting, in next 5-6 months, not even the stock, what's going to happen is more pressure on the US stock markets. So S&P 500 gained as what it could gain right now till now. Now is the time to give it the pressure. There is unless. If only the central bank cut the rates by 50 basis points in September and not 25 basis points, this scenario can change. Otherwise, if the Fed cannot change, if the Fed do not change the idea of 25 basis points and cut the rates by 25 basis points, the pressure is going to be continuing in the stock market. But if they cut the rates by 50 basis points, that can be supportive for the stock market and change the scenario of thinking about the higher levels. That's what's going on in the stock market, and that's what we can see for the stock market. Otherwise, they told what's going to happen here. Same thing we can think about the US dollar. Look, the US dollar is getting weaker. If the Fed cut the rates by 15 basis points, that shape can be formed. I mean, this shape here, you can see, it can continue at the same way under the 100 mark. Otherwise, if they do not cut it by 15 basis points and cut by 25 basis points, this can be slower, but still the US dollar can be weaker. So, but the only thing is that when we are reaching the 100 mark, it's like faster way or a slower way. But generally, the US dollar index is a downtrend. It's a down movement. In a downturn movements. That was we can see here. So generally, the US dollar can be a little bit weaker currency compared with the euro. Again, I say compare. It doesn't mean that the US dollar is going to be weakened. If you compare it with the US dollar, if you compare it with the British pound, if you compare it with especially with the Japanese yen, it's going to be a little somehow weaker currency, but generally it's not a weak. But generally, as I told, that's what you can see here. So that's happened here. That what happened in the market. And if you look at the oil market and energy market, and then the gold market, the energy market is somehow it's a little bit the uncertainty. The energy market can continue here as we are thinking about the lower economic growth, lower demand for the oil and energy in general in 2025. The oil will not have a bright future, but Again, oil is the political commodity, kind of. It's dependent on the geopolitical tension. As you know, for example, the last night we had a news that the peace talk or the ceasefire talk between the Hamas